Hi friends, welcome to StockGen. Today let us see the detailed analysis on Bajaj Finance. Remember, these are my views based upon the research I have done and this is not a recommendation in any way. However, you can watch this video for educational purpose and do your own research before investing. Watch video till the end to know very important facts about Bajaj Finance which most of the people are ignoring at this moment. From 19th Feb 2009 to 19th Feb 2020, the stock grew from 5 rupee 80 paisa to 4,920 rupees, which is a phenomenal return. For example, a person invested 1 lakh rupee in 2009 would have grown to around 8 crore 50 lakh by 2019. But from 19th Feb 2020, the stock has corrected from a high of 4,920 to 2,400 in just 4 months. Now let us see if valuations are attractive. And we will also see the fundamental analysis of the stock in this video. Now let us go into a bit of history of the company. In March 1987, the company has started and initially the name was Bajaj Auto Finance Limited. In the year 1988, it became Public Limited Company. In the year 1994 to 1995, it was listed in both the stock exchanges, which is BSE and NSE. It was listed at a price of 80, but if we adjust split and bonus, then the price would come to around 8 rupees. In the year 1998, Bajaj Auto Finance Limited got NBFC license from RBI. Initially, first 11 years, this company used to give loans for two-wheelers and three-wheelers. In 1998, they tied up with GE Auto Finance and LG Consumer. From this year, they started diversifying into new businesses from auto finance. From year 2000 to 2010, they diversified into various businesses by giving loans, and in this time period, they adopted a very advanced technology. If we go into past, a bank used to take 5 to 10 days to approve or reject loans. By adopting advanced technology, Bajaj Finance could do this within 15 minutes, and because of this fast processing, consumers used to like to take loan from Bajaj Finance. In 2011, lifestyle and consumer-related loans approval and rejection time was brought down from 15 minutes to a flat 5 seconds. By doing this, even a lot of shopkeepers started encouraging Bajaj Finance, and because of Bajaj Finance, their sales used to improve a lot. Hence, they gave permission for Bajaj Finance team to operate from their stores directly. In this way, Bajaj Finance business grew rapidly. Even after such impeccable growth by Bajaj Finance, they did not stop their innovation. In the year 2012, they came up with EMI or existing members identification cards. It means whoever was a customer of Bajaj Finance could take a loan in future again by just showing the card. So the time taken for existing customers reduced a lot, and hence a lot of customers started to take loans repeatedly from Bajaj Finance. If we look at last 12 years performance from FY9 to FY20, assets under management grew from 2,539 crores in FY9 to 1,47,153 crores by FY20, which is a CAGR, compounded annual growth rate of 45%, which is an impeccable growth. Their net interest income grew from 435 crores in FY9 to 16,913 crores by FY20, which is a CAGR growth of 39%. Their profit after tax grew from 34 crores in FY9 to 5,264 crores, which is a phenomenal growth of 58% CAGR. Their return on equity grew from 3.2% to 20.2%. They showed a phenomenal growth in last 12 years in all the parameters. By the end of March 2020, Bajaj Finance had a presence in 2,392 places. Also, their overall distribution network is more than 1,14,400. If we look at the detailed results of quarter 4 2020 and compare it with quarter 4 results of 2019, according to management commentary, due to sudden and unprecedented COVID-19 pandemic, India was under full lockdown and thus the company lost 7 to 8 productive days in March. Despite this, quarter 4 was a good quarter with growth in assets, new loans, new customer acquisition, and franchise. Their assets under management grew by 27% and came up to 1,47,153 crores. Their net interest income grew by 34.4%. Their profit after tax degrew by 19% due to contingency provisions of 900 crores, and if we exclude this, their profit after tax would have shown a growth of 38%. In these unprecedented times, company is focused on capital preservation, balance sheet protection, and operating expenses management. Company has healthy capital adequacy, strong liquidity position, low gross and net NPA, and access to retail deposits. Hence, company is confident of navigating the challenges posed by COVID-19. If we look at the shareholding pattern, promoter and promoter group hold 56.2%, FII and FPIs hold 21.26%, and mutual funds hold 8.08%. Let us look at their liability book. Liability means normally NBFC companies taking money from banks, common people, various financial institutions in the form of deposits, and after the term ends they have to repay that back. If we look at the image, deposits itself is 21% as of March 2020. In March 2013, their deposit collected amount was zero. From there on, they managed to grow to 21%, which is a very good growth. And this is a very important point. Bank loans stand at 30% and NCD stands at 38%. Now let us talk about one important parameter which a lot of people are ignoring. If we see, a lot of NBFC companies are facing trouble with ALM mismatch, that is asset liability mismatch. Generally, NBFC collect deposits which are called liabilities and they give loans to common people and financial institutions that are called as assets. In a lot of NBFC companies which collects deposits, the deposit tenure would be 2 years to 3 years, but their loan tenure will be 5, 10, 15 and 20 years. Why they do this is because those companies believe their existing depositors might renew their term or fresh depositors might come from time to time. But after ILNFS issue, a lot of depositors are not showing much interest in renewing or doing fresh deposits. And because of this, a lot of NBFCs are facing this asset liability mismatch. If you all remember, DHFL issue also started with this ALM mismatch. If we look at Bajaj Finance, not only from banks, they also collect deposits from common people as earlier mentioned. And individual deposits tenure will be generally 5 years and above. And Bajaj Finance consumer loans like loans for mobiles, TVs, fridge will be hardly 1 to 2 years. By this, what we understand is that their deposit tenure would be more than their loan tenure. What we can clearly understand by this is, when compared with other NBFCs, Bajaj Finance ALM mismatch is very less and also healthy. My opinion on Bajaj Finance is, historically in the past, whenever we saw the crisis, strong companies which can withstand the crisis grew stronger and quicker post-crisis. In 1992, when NBFC crisis happened, post the crisis, HDFC has become very, very big. In 2008, after financial crisis, HDFC Bank has become very, very big. What happens in the time of crisis is the weak players will exit from the market or their competitive strength will go down. Hence, there is a scope for strong players to become even more stronger and quicker in terms of growth. One more important point is wherever NBFCs operate, banks can't operate completely as banks will have some constraints. So, strong NBFCs will survive this crisis and become much stronger and grow much faster. Also, according to me, it is better to wait for some correction to invest in Bajaj Finance, as a lot of negativity is there in the market, and after EMI moratorium, Bajaj Finance NPAs might increase. I would like to invest in Bajaj Finance at around levels of 1500 to 1600 as I feel those levels justify the current valuations. I'm doing this video right now so you have the time to do your research and arrange funds. Bajaj Finance is a strong company and when it corrects further, it will definitely be helpful in taking a right decision. If you have any doubt, please comment below. Also, if anyone has invested in this stock, comment below with price. We are coming up with informative updates. Please like, share and subscribe to our channel. Thank you and take care.